Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and we are in the final 2 minutes of the trading day here on this Friday, December 20th. If you had a chance to catch my midweek report, I did mention that there was a good, strong possibility we would see a bounce after that 1,100 point drop that we saw on Wednesday. And so that's exactly what's happening right now. All targets have been hit to the downside. IWM, QQQ, SPY, the VIX hit the upside targets. It's really going very well. Looking at DIA, you can see that today we filled that gap. Now, if you're following my gap fill rules, you'll know that 80% of the time gaps fill. Then, after those gaps fill, there's an 80% chance that prices will reverse from the gap fill point. So in this case, we're expected to rally. We're showing a bullish engulfing candle right here as we're coming into the final minute on DIA. So my forecast for next week, and I'm going to elaborate on this in a little bit with the year-end rally coming up, I'm going fairly conservative here to the upside on DIA at 432.62. So keep an eye on that. Looking at IWM, you can see that, again, we hit the downside target, hit the upside target back here. We are now, again, showing a green candle, not quite a bullish engulfing candle, but look down below. The stochastic is about to cross with the buy signal. The CCI is oversold and about to cross with a buy signal. And we do have a slight drop in volume on the way down. I've been explaining that to all of our members and viewers on YouTube, that when the volume is dropping on the way down, it tells us that the sellers are losing momentum on the way down. So for IWM, again, being conservative here, 226.51, and that's my upside target. And here we go. The markets are officially closed again on this Friday, December 20th. If you like what you see here and you're getting some value from these videos, please hit the like button and share these videos. It helps us out quite a bit, and I thank you for doing that in advance. So IWM, again, the upside target is going to be 226.51. We have this wide divergence from that moving average. You see that? This gap has already filled. We're waiting for the pivot up. So all those things play into upside price targets at this point right now. Looking at QQQ, tech sector hit the downside target that we had back here of 525.12. Look, we have a green candle, but we have a half signal, not a bullish engulfing. We still have an increase in volume after a drop in volume yesterday. I'm paying more attention to the drop in volume yesterday because the increase in volume today on that green candle tells us that there's a battle going on. Look at the pivot on the CCI. Very, very briefly touched the oversold line. Now we cross with a buy signal, and look at the divergence between the K and the D right here on the stochastic. You see the blue line and the red line. When those are wide apart, like we saw back here and even back here, that is bullish when the blue line or the percent K is below the percent D, which is the red line. When that happens, we tend to see the markets rally. So again, I'm expecting a rally into next week. It's a shortened trading week because of Christmas. Not getting crazy here on the upside, but I am going to 527.18 on the Qs. Moving right along to the spiders, you can see that we are in a green candle condition. Same scenario as what we saw in the Qs. We got the oscillators pivoting up. The stochastic is more or less hinging up. We hit that downside target from back here in November. So that is absolutely hit. Now that that downside target is hit, I'm moving, again, like the other major markets, I'm moving to the upside. So I think that we're going to see a move back up to that 20-period moving average. Keep in mind that the 20-period moving average had acted as support back here. Now that it's broken below that moving average, it will most likely act as resistance here. That's known as role reversal. Very similar to what we look at in a horizontal line. When you see it break below support like we see here, that support line reverses its role and turns into resistance. It doesn't matter if it's a horizontal support line or if it's a moving average, it does the same thing. and you treat it as a role reversal. So again, it's trading below the moving average. It's going to act as resistance at this point. Again, to reiterate, upside target on SPY is 597.07. Moving to the VIX, had a crazy week for the VIX. Hit the upside target from back here, hit the guaranteed gap fill here, and now we have a bearish engulfing on the VIX, and it closed right on the low. So I do believe the VIX is going to drop to that moving average. Forecast to the downside is 1590. Look down below. You're about to cross with a sell signal on the stochastic, and it's about to cross with a sell signal on the CCI. Now, I want to talk about next week. Being the year-end rally is a 7-day window. Now, I'm going to focus on the S&P right here. You can see that the S&P today rallied 1.15%. So what's the big deal in the year-end rally? Well, it's a cycle that we see on average over that 7-day window. We generally see a 1.4% rally overall in the market, and I do believe we're going to see that, and possibly we'll see a little bit more to the upside. It's a 7-day window that begins on Christmas Eve. Even though it's a half a trading day, that begins day one. Christmas, obviously, the markets are closed, as well as New Year's being closed. So it's the last 5 trading days of this year and the first 2 trading days in the next year, which is the 2nd and the 3rd. So there's your 7-day trading window. I do believe we are going to rally and possibly go beyond that 1.4%, but anything could happen. As you know, the news is out. We don't know if we're going to have a government shutdown. I don't think that's going to have a big effect on the market, actually. Maybe next year it will, when Elon Musk and Vivek Ramaswamy get together and start cutting government jobs. That's going to throw the unemployment numbers through the roof, because the government workers are going to have to find private sector jobs, and the job market is not looking all that great. Job openings, as I reported a couple of weeks ago, are on the decline, so it might be a little bit of a struggle there as they look for jobs in the private sector. Tonight, from 6 to 7, even though it's a Friday, we are having the rapid fire stock analysis session. We doubled up this week to make up for Christmas being the holiday and New Year's being the holiday. So we are going to have our rapid fire stock analysis session tonight. And then next Friday, being the 27th, we're going to have another rapid fire to get ahead of the New Year day being closed. And I'm hoping that everyone takes time with the family and you enjoy that time off. And I want to thank you all, being that this is the last market report before Christmas. I want to wish you all a Merry Christmas. You'll hear back from me next week. We will not be having the midweek report on the 25th or on January 1st, but I will be right back with you on the 27th and then again on the 3rd for the weekly market report, wrapping up those weeks. Thank you so much for liking and subscribing and commenting and doing all those great things. You're helping us out to grow the channel, and we are absolutely doing just that. We're growing the channel. We're approaching 12,000 subscribers, which is a lot for us. So we appreciate that. And then after we hit the 12,000, we're going to see the numbers grow into 2025. So again, have a great holiday, and we'll talk to you next week. So long.